What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol ROOT for Root Inc. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, yes, this will be an update. We covered it just the other day when earnings came out here. The main thing I want to point out, the reason I'm bringing this ticker back up is because we're coming in hot and heavy to the top end of the prior range. I mean, in an ideal world, we would have held on to this shelf of support, then acting as resistance here. And what I mean by held on is that, when we made this move higher, so this here, we would have held up for support here and potentially bounced off of it. So this 562, again, that would have been scenario number one. Ideal world, rainbows and butterflies, everything's picture perfect. That would have held this support, and then we would have bounced higher. But as of right now, the candle did close underneath it. Technically, the daily candle closed underneath it. So the next line in the sand, the one that you need to see hold here inside of Root for continued upside, is the top end of that range, which we just had drawn in at 535. Here is that range which I was discussing. So as long as we hold up above that, things are like, okay, this is scenario number two, not quite rainbows and butterflies. Maybe it's just like, okay, smiley faces and stickers and whatever, right? Glitter, whatever. So that is scenario number two. 535 must hold level here inside of Root. If we get back down into it, start to be on the lookout for hammer candles that print, indecision doji candles, things that make you question, right? Is this pullback here ending? Can we flip long over these highs and then reattempt some of these upside targets? Note that we have firstly, we would have to fight back up through that 562, but after that, we have 588 and then 603 coming from prior support. And then we'll go ahead and throw on the breakout point up and over 633 to get us into the next daily level at 680. Okay, so that's what I'm seeing here inside of Root as of right now. Not really looking the greatest. Note that Friday's session closed fairly weak, right? If we take out the fibs, come in from the high of, there it is, there's the 930 bar. We'll come in from the top down to the low essentially, and sure, there was a dead cat bounce into the 38.2, but we faded off of it into the end of the day, which is why, again, I've classified the close of Friday as a weak close there instead of a attempt at closing above the 38 point. Just never happened, right? Never happened on Friday. So the sellers do appear to be, at least as of right now, in some sort of control. So we are looking for the downside, but we'll see if that holds as support. 535 is that must hold level that we've been hammering home in today's video. If we do break down underneath it, treat this entire thing as a look above and fail. Technically, the target should be the bottom end of the range at $4.67. You would reevaluate the chart once we got there to see if it's a long opportunity, see if we can bounce off the bottom end of the range, back up towards the top, or if we're going to get a breakdown and continue into sort of these uncharted waters to the downside, right? Remembering that we really don't have any known support underneath that 467. It's really going to wrap up the video. If you enjoyed it or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.